Hey guys, welcome back to Trading Technicals, and in today's video we're going to be discussing the head and shoulders pattern, one of the most common trading patterns used by traders. And we're going to be discussing it in terms of what is a head and shoulders, how do you set up a head and shoulders, and how do you use the head and shoulders pattern. Okay, so what is a head and shoulders pattern? A head and shoulder pattern is a bearish pattern, which means that it indicates that share price is going to move down from this formation. The basics of it is it consists of three things: a left shoulder, a head, and a right shoulder. Let's use an example to illustrate this. The blue line is a hypothetical share price movement. As you can see, on the left we have the left shoulder, the head, and the right shoulder. How you define these shoulders is the shoulders are smaller than the head and located on either side of the head. At the bottom you'll see a neckline. The neckline is the place at which the share price finds support. So in this case it was started here, found support here, came to touch the support and broke the support. Okay, so now that we've got the basics down, let's get onto a practical example. On screen you'll see an example of a head and shoulders pattern. The share price moved up, came to touch the support, known as the neckline, moved up to form a bigger head, came down to touch the support once again, formed a right shoulder that was symmetrical to the left. Alright, so now how does a head and shoulders pattern work? What happens is, once this formation has formed, you look for a break in the neckline. In this case, there was a false break, where the share price broke and came back over the neckline to retest. This is okay, and we'll discuss this just now. How the target method for head and shoulders works is, what you do is you take the distance from the peak head down to the neckline and you subtract that from the neckline. As in this case, you see that the head and shoulders pattern worked out very well as the share price reached the target level after a set amount of time. Now, back to the point from earlier. A head and shoulders pattern is only taken off the cards with a false break if the share price moves above the right shoulder. As long as the share price is still below the right shoulder, the head and shoulders formation is still intact. Now, onto how we could have avoided this false break. Using the stochastic indicator that we discussed in previous videos, one can see that at this point where there was the false break, a buy trigger was triggered on the stochastic. If one had held, one would have seen the sell trigger triggered here as the stochastic moved below the moving average once again. At this point, the neckline was retested and a short position to bet the share price to go down would have worked out and would have coincided with the stochastic method. Okay, so for the last pattern we're going to look at, this is the one where you have the case of a double shoulder. Now, in this case you can see, as before, the share price moved, came back to touch the support, formed a large head, formed a right shoulder, and then came to touch the support again, and instead of breaking and triggering the target, it bounced off to form a second right shoulder. And once the second right shoulder had formed, the neckline was broken and the target was reached. So the case is not always definite. Sometimes you could have a double left or a double right shoulder, but the pattern still remains the same as long as the shoulders on either side of the shoulders are below the top. As you can see, this one was. So what happened is the share price broke the neckline and the target was reached. Okay guys, thanks so much for watching the video. If you liked the video, please give it a thumbs up. If you want to follow my page, it is at TechTraderJSE. And also, if you want to download my mobile application, which gives more information of the stuff I talk about in the videos, go to Google Play, and it's under Trading Technicals. Thanks.